Hello and welcome to the UPSC Quick Revision series. Today we will discuss a crucial pillar of international relations and the global economy, the World Bank Group, that is WBG. Established in 1944, this institution is not just a bank, it is a unique global group comprising 5 development institutions. While its initial purpose was post-war reconstruction, today its main goal is to eliminate extreme poverty and promote shared prosperity worldwide. So, today's agenda is we will understand what the World Bank Group is, its historical evolution, the 5 institutions it comprises, its structure and functioning, and the major criticism it faces. The roots of the World Bank lie in the 1944 Bretton Woods Conference. After World War II, the global economy was devastated. In this context, representatives from 44 countries met in Bretton Woods, USA to lay the foundation for a stable global economic system. This conference gave birth to 2 twin institutions, the International Bank for Reconstruction and Development, that is IBRD, which we now call the World Bank, and the International Monetary Fund, that is IMF. At that time, the primary objective of IBRD was the reconstruction of the war-torn European countries. When we say World Bank Group, we refer to its 5 institutions. The first 2, IBRD and IDA, together form the World Bank. IBRD provides loan to middle-income countries, while IDA, also called the soft loan window, provides interest-free loans or grants to the world's poorest countries. Additionally, IFC promotes private sector investment, MIGA provides insurance to protect foreign investments in developing countries from political risk, and ICSID handles disputes between governments and foreign investors. However, India is not a member of this institution. The World Bank functions like a cooperative institution with member countries as its shareholders. The highest decision-making body is the Board of Governors, where each member country appoints a governor, usually the finance minister. Daily operations are managed by the Board of Directors. Unlike the United Nations, the principle of one country, one vote does not apply. Voting power depends on a country's capital contribution or quota. This gives countries like the USA, Japan, China, and European nations greater influence. Traditionally, the World Bank president is always a US citizen. Today, the World Bank Group has 2 main goals. First, to end extreme poverty by 2030, that is, reducing the number of people living on less than $2.15 per day to 3%, and second, to promote shared prosperity by increasing the income of the poorest 40% in every country. To achieve these goals, the bank provides loans, technical assistance, and knowledge sharing. The World Bank is not just a money lender, it is also a knowledge bank. It publishes several important reports, such as the World Development Report and Global Economic Prospectus. Its Ease of Doing Business report, though widely discussed, has been discontinued. Despite its vital role, the World Bank has faced significant criticism. The biggest concern is its governance structure dominated by rich countries, which limits the voice of developing nations. In the 1980s and 1990s, loans were often tied to strict structural adjustment programs, that is SAPs, requiring privatization and subsidy cuts, which were criticized as anti-poor. Additionally, large back-funded projects like dams raised environmental and social concerns. In response, BRICS countries established alternative institutions such as the New Development Bank, that is NDB. Now, let's test our understanding with a few practice questions. And that wraps up our discussion on the World Bank Group. Share in the comments which topic you want next and keep watching Vision IAS Quick Revision series.